Thank you very much indeed. It's a pleasure to be here. I don't want to repeat anything that's been said, but I do think we need to start off with the fundamental observation that Greece has seen the start of a recovery here. The direction of travel seems to be positive. The recent sovereign bond issue, 44% of that, of course, was managed through London, was oversubscribed, demand relatively healthy. Major credit ratings agencies upgraded their assessment of Greece recently too. All those are positive signals. Moving forward on investor sentiment, I would say 5 things are important. The exit from the bailout program this summer. Equally important, the continuation of reforms, and picking up and endorsing some of the comments that colleagues made earlier. Thirdly, EU and ESM support. Fourthly, fiscal sustainability. And lastly, a recognition that any disruption to the market, any market turmoil from external events, not necessarily related to Greece, may have a disproportionate effect here in Greece, and we can't discount that. I'll come back to that in a short while. I think very strongly that there is an opportunity to increase trade and investment between the United Kingdom and Greece. We've seen 3 of the 4 final round interests in bidding and looking at MPL opportunities coming from London-based institutions, and their bids are currently in line with expectations, I understand. The scale of exports, both in goods and services between Greece and the UK, is encouraging. Obviously, from my industry's perspective, services is a big focus related to financial and related professional services, shipping, education, and so on. I understand there are going to be 2 floats of Greek companies shortly on the AIM market. And perhaps one of the most staggering facts in preparing for this trip to Greece was when I read that 500,000 Greeks in some shape or form had educational links back to the United Kingdom. That's a tremendous signal of the close links, and one we shouldn't take for granted, but we should certainly make more of. I do want to use the rest of my remarks just to say a couple of things about Brexit, because I do think it's important. It relates not only to some of the public policy issues that are being discussed here at Delphi, but also, of course, relates back to one of the factors I identified earlier. And I find myself in very close agreement with Lord Maud's comments in the previous session. My industry is focused on customers and clients. And the City UK, which represents financial and related professional services in the UK, has 3 priorities for the Brexit negotiations. The first is the agreement rapidly of a transition period. This is hugely important because it gives continuity and stability while the final shape of the deep and comprehensive agreement between the United Kingdom and the EU27 is negotiated. Both the UK and Greece have a significant interest in services, and services must be part of that agreement. This reinforces our national interests, both in UK and Greece, and indeed focuses in on providing the best services that we can give to our customers and clients throughout the European space. The second area is a bespoke deal based on mutual market recognition. We've done a huge amount of work in the United Kingdom, in the TCUK, about this, and it's really important to recognize that the European system of equivalence and third country recognition does not work for an industry of the scale that's based in the United Kingdom, but mutual recognition on regulation does. At the point of departure, the UK will be converged, as Lord Maud said, with the EU. So the issue is not about building up towards convergence. The issue is how you manage potential divergences and difference in the future. That's a very different mindset, a very different type of challenge, and we must be creative, all of us, in the way that we address that. And lastly, it's about people. It's about mutual access to talent. And I stress mutual access to talent. Again, incredibly important. My biggest concern, if we don't get this right collectively, is that we will see fragmentation of the European financial markets. functionality leaving Europe, going to other international financial centers of scale, New York, Singapore. That will not help us here in Europe. That will not allow our industry to give customers and clients the best products and services at the right price point, and that will undermine European competitiveness. So there's a real risk of not getting this right. The last point I'd like to do is just to reflect on a couple of statements, and I quote, outcome-based and backed up by specific arrangements to govern EU-UK regulatory cooperation. For this, we need a solid treaty-based system for regulatory cooperation. I am not naive. We, of course, never agree on everything, and neither jurisdiction will be able to force the other to follow its rules. But we can try harder, and we could do better to avoid problems. I've changed one letter in that. I said EU-UK. The actual statement was EU-US, and it was Michel Barnier 3 years ago when he was a European Commissioner. Thank you.